Hello everyone, welcome back to another bookmap video. In today's video, we will go into the second part of discussing the basics of bookmap. If you haven't seen my previous video, you can go ahead and watch my previous video. In that video, we discussed the basics, that is, what are market orders, what are limit orders, how does the market move, what is heat map in a sense that we see over here on bookmap. How powerful is it? How can we use it to make our trades more, have a higher probability of getting profitable trades and so on. So it in any sense doesn't mean that we will never have losses. Of course we will have, but when we have an edge which we can trust, we will always take trades with a little bit of more confidence. We're expecting some things to happen and they happen in accordance with that. It helps our confidence a lot, and then helps us in moving forward. So having said that, so what we have here is the Nasdaq NQ4, that is this June month's expiry, along with S&P 500, the ES Mini. So ES Mini is the S&P 500 futures contract that we have on here. So for everybody who is new, what we trade is the futures. We don't trade the index. It's the same everywhere across the world. So this is the place where we actually can put on trades and expect to make money, or even lose money for that matter. And similarly, NQ is the symbol for the futures for Nasdaq 100. So why have I chosen these two as of now? Because they're quite liquid. What do I mean by liquid? It is that the spread, if you remember the last time when we had this session, I said that what you see on your order book, or rather what you see here on the right side, that is the current order book, these are the passive orders or the limit orders. So these are resting. You can see them on your broker terminal as well, and you can see them here on bookmap on the right side. It is also called the depth of market. What is being executed here? The best bid ask, of course, is are the limit orders, but what are being executed, that is these red dots and the green dots, are the market orders. What you see here is the footprint that I have on. So again, how do you set it up? We will go about that in maybe another video, but this is the way you can have it switched on, footprint, and the settings we'll go ahead and maybe discuss again in on later videos. If you still have doubts how to set it up, I have that video on my channel. You can go ahead and look over there. And if you want to subscribe to Bookmap, again, the link is in the description. Now, moving ahead, so these passive orders or the limit orders are what we see on the right side, okay? And what we see here in the form of dots are the market orders. What we see in these profiles, if you see these profiles that you're seeing, the red, the blue, and the red, is again the market orders. Now, if I do something like this, I turn off the best bid and ask, and I turn on the last price. This now becomes only market orders on my chart, barring aside the heat map that you see here. Now, the heat map is something that is indicative only of limit orders. So if you look over here, this part, if you see, okay, so you see a dark red over here. So what does it indicate? If you see the current order book, there is a large set of resting orders that are over here, and that is why this is red. Now, sometimes these are placed in order to play with the market, or manipulate, some people call it, but this is how the world works. It happens everywhere. So you have to make use of the best available information and trade accordingly. Okay, now like we discussed, like you see suddenly over here, you see a darker shade of red coming in. So, and you see these orders suddenly bulking up over here. So it indicates that someone has decided to put some passive orders here. Now, one indication that you might infer from this is that whenever a huge chunk of orders start coming on the top over here, it indicates most likely that the market is going to go down. Now, again, this is not sacrosanct. It, like for example, the moment we saw, it started moving on. Now, this is not sacrosanct. It can happen sometimes. It may not happen sometimes. Again, it is again it is, you cannot call it an indicator. It is information that you have to look at, and look from the point where we discussed it's gone down. Like I said, it can happen a lot of times, but not all the time. So this is some information that you can keep looking at when you are taking a decision to maybe go long or short, or whatever position you want to take. Okay, so right now, if I look at the order book, when we were over here, you saw the reds being protruded a lot more than the greens. Suddenly from here, you see that the greens are a little more bulkier, or they're more in volume than the reds. Now this is moving really fast. So again, it needs a lot of screen time to get used to this, to be able to decipher how the passive orders are moving. So we've always said that the markets move because of aggressive orders, but the passive orders do have a role to play, and the role is like we just discussed. So this I've discussed in my last video as well. So if for example, we see a lot of absorption, the term absorption being used a lot of times. So what does it mean? It means that like, let's take this example. Okay, what did you see? We see a lot of market orders going and flushing down everybody. So what do you think has happened here? Let's consider this point. So this maybe would have been a point, let's say a support or resistance, if you're seeing on a plain candlestick. Or let's switch on the best bid box again. Okay, and let's switch on the last price. Okay, and so something like this. So you see it has been taking support over here for a lot of time. This is a place, if you look at it, there's a big red dot over here. So this is what is absorption. That is, there were so many sellers. If you look at the footprints also, the maximum number of sellers were in two zones in this range. So this is a range footprint. Again, we will discuss it in the coming sessions, but as of now, just understand that I am having this footprint plotting in a given range. So for example, in NQ, I think it is, let's go and check what we have on. So this is the add-ons, and we can go ahead and see over here footprint. So I have 50 ticks over here. Okay, so whenever the 50 ticks are finished within a range and it moves to the next part, a new footprint chart will be plotted. Okay, so when I'm looking at this part, like we saw, this was the area where the market was taking a lot of support, and this was the last piece of straw, where again you saw a heat map support of passive buyers over here. The market moved down, flushed out all the sellers, or the stops you can call them, and you look over here. Why do I have the footprint on? I can immediately see that this area in this range did have a lot of sellers or stops. It doesn't matter, you see a lot of sellers and they weren't able to take the market down. The next place was this, and the market again pops up from here. Okay, so again, this is a very famous pattern, or very I mean, this pattern I keep on discussing whenever you see something like this. Okay, and the market go down and come up immediately within this range, you can straight away go for a long, or the other direction, because it has broken a range and come back inside within seconds. Okay, and you can have the stop placed here. Again, the target is 1:2, because you're expecting the other end of the range to reach, and it pops up from here. So similarly, the next time the market comes here, you see a sell over here, and from here you're expecting it doesn't pop down, it goes up a little bit. So even if you've taken a long over here, let's say, assuming the same concept that absorption has taken place, okay, and you're planning to take a long over here, and you do enter, okay, and then you see this spot where the buyers come in and the market fails, and this is another one. This is the second attempt, and this is the fourth attempt. So what I would generally do is, if it doesn't go in the second attempt and it started moving down and it is holding here, I would generally move my stop a little closer, because I expected something like this with these many number of sellers. You look at this, minus 179, 86. So these are a lot of sellers. The market, if it is absorbed here, the second one is generally, if the market has to go up, it'll come here and it take a smaller one. It will not come down to here and go up again. And that is where I'm looking to take, look to aggressively trail my stop loss or stay right there. But when I'm seeing something like this and the market not moving above this zone, if you see 18,310, it is again an indication to me that the market isn't ready to go up. So I would rather move my stop a little bit, or move it to break even or just below that, so that I don't give many points. So it does give you a lot of chances before it finally breaks. Now, why did I tell all this over here? It's because if you see over here, so this is the zone where the last time the absorption took place, and I'm expecting the market to hold here. This was the range which it was actually holding, and this was one pop and it went back again. Now this time it breaks, and as soon as this breaks, you can see what happens. Now these are obviously stops getting triggered because this was a very important point which broke. Now again, how does this help? This is again, if you see, as of now, what you have here is the VWAP being plotted. Now if you look at this, when it pops from here and the next time it comes here, you again get a good shot. Okay, so if you're looking for, like in the last video we discussed, we're looking for, let's say, a 5-point stop loss and a 7 to 10 point profit, take profit. So this is a very good place to short, especially if you see something like this. Okay, again, what I would have preferred is when it comes down like this. Okay, I generally do not want to enter immediately when I see a let's say a green dot. I know this is a resistance area. What I would have liked to see is it hover around, come here, again show a green dot and go down, something like what I discussed just over here. Okay, so we're just going step by step into the basics. We'll go in the future sessions. In each and every video, we'll go into the detail how to custom yourself to this particular setup or any setup, and how to custom yourself to Bookmap, Heatmap, and footprint charts. Okay, so now let's look at what is going on in the current market, in the context in the real markets. Okay, now we know now, like we've just made some sense of the context that has happened behind us, on the left side of us rather. Okay, so this is a place which is a resistance, and if it was to let's say go above this, okay, and hold on for some, so as of now what we're seeing is this is one zone. Okay, you can see it with the help of fractals over here. This is one zone. You can go ahead and let's get the drawing tool out and let's have a rectangle. So this is one zone that I can see straight away. Okay, now let us switch this off. Okay, as of now, so this is one zone I can see it is trying to hold for this time and trying to go up. Now if it does break into this zone, what I can, something like this, what we can expect is on a pullback we can expect a test of this again. If it doesn't, and if it pops back again like this, we go for a long trade. Okay, so this was the area like we just spoke about. So if something like this happens again, it doesn't, and see what happens. So this is how you can you see this pullback and you see it failing, that is when you enter. Okay, if it has not gone immediately and it has failed, you can enter even here, because now, like we said, I'm expecting this to be tested again. And you see this area, a lot of buyers are over here. So this is how, and they've all been taken out. So this is what the market does. You would have heard that frame a lot of times. The market looks for liquidity. Liquidity is where a lot of orders are there. So where are the places? If you look at the Bookmap, Heatmap, or on the right side current order book, as of now on the buy side, this is the place. Okay, if you look over here, so I can again use the rectangle tool. It keeps changing quite fast, so that is why it becomes, so this is the zone as of now I'm looking at where there is potential support. Again, this is not a line, I'm just looking at the order book and I know that there's some sort of buying support that has come in here and it might act as a support. Similarly, the resistance as of now, so if you look suddenly in the market, in the order book, what has happened, the buying has or the passive orders have become a little more in quantity, you can say, as compared to sellers at this point. So now when the market comes in, do you see the selling not being able to again go down? This is the same pattern that we just discussed. It is not able to go down with a lot of selling. So again, you can enter somewhere here on the same premise and have your stop loss right here, just below this zone where you see something like this, about 5 points, and expect this as your target. Okay, so you can see what is happening. So it is nothing, I mean, if you keep looking at the charts again and again, and it's okay to lose, but the point is when you have an edge, if you win even 6 to 7 times out of 10, and with the risk reward in your favor, you will always, I mean, be profitable in the end. And what really, so see what it has done. So we could, it's not that it's again an educated guess. I don't know what is going to happen for sure. Let's clear off all the drawings first. Okay, and let's clear drawings. Okay, so again, I didn't know what is going to happen, but when it was touching here the first time, I was expecting this, because this is a pattern you will keep seeing repeated every now and then. Now it is broken. Now when it has come here, you see it's again going what is the difference between this and this? Now I wouldn't short this, I mean, I wouldn't go long here. Why is that? This is the same place and the same almost the same pattern, but I am not confident in going long now. Why? Because I've seen some selling step in. I've seen this market sell orders on the current order book showing suddenly some interest over here. Okay, see what is happening. So this is the difference between not going for a long here and going for a long here and not going for a long here. Okay, so there can be, of course, there can be times when I do not want to take a trade. So we've just discussed two scenarios and they worked in our favor. Again, it's not that I'm right all the time. I will be wrong a lot of times. You've got to be okay with it, and you've got to notice the subtle changes and the subtle differences that the market is showing. So we'll go about all this in our future sessions as well, and understand the subtle differences. Now, the other thing is, you've seen this trend go down and we still took that long overhead. Why is that? Because I'm looking at the order book and then deciding. I'm not looking at anything else. And when you're scalping, you can always look at small take profits, because the pops up would also be good. So again, when you're looking at a market that is going down like this, for example, in this particular scenario, it's not always advisable to take a short without looking at the market. Okay, so let's see what is happening now. Again, so you see these numbers, you will get used to these numbers as well. So this is the place where the buying came in, or the buyers tried to step in but failed. Okay, and after that, if you just look at the numbers also closely and the big dots that I have plotted, you will see that red is the majority, and this is one place where the buyers have started to show their presence again, and you see it's happening again. So if you have to see any type of longs going in, so you see it's gone up, this is the place what I was talking about. This is the barrier which should cross for you to now start thinking of not entering the short for this particular range. Again, I will draw it. Okay, so you have to keep changing and be dynamic about what is happening. Let me get the rectangle tool. Okay, so I will not look for a short until this is breached. Okay, if I'm looking for a short here, this is the target I'm getting. Okay, so this is 7 points. So if you're ready with 7 points and a 5-point stop loss, it's okay. And again, if this is breached, these buyers are, if they're breached, we will of course expect this. But if you look at the order book again, you can see a sort of buying presence which is more than the selling presence suddenly in this down market. And you see this place hold, and this is the place where we can expect the market to test. Again, see over here, and the next one would be this. Okay, so you see why I was saying I'm not ready to short here. So these are small things that you can catch and look at the market. Again, it doesn't come overnight. You'll have to look for you'll have to spend hours together over here and spot these small nuances. Let's delete this again and clear drawings. Okay, so we've cleared this place. Now let's look at the present scenario. Hopefully I'm able to convey what the Bookmap, or what the power of Heatmap and footprint together can be. And hopefully, even if you're finding it a little difficult to grasp, or even if you get chunks of it with time, as we go along, you will get to understand these charts better. If you look at the screen more and more, you will get to understand these charts better, and hopefully you'll be able to trade a little better. So now let's go on to the part where I will just explain what do I have on these charts. So again, a lot of people have doubts, and they come up asking that what is there on your chart. So this footprint is a range profile. I'll go into the settings once again. Okay, if you still have doubts, you can put it in the comment section. We'll go into the part where we can set up this. We'll devote one full session into how we have set up these footprint charts. Okay, so I have this range of 50 ticks, and what I have done is the footprint type is delta. It is not volume profile, it is delta. Okay, so this is not volume, this is delta. So I would simply want to see the power or the aggression of the buyers and sellers, and not the volume at this point in time. Okay, and the remaining is again not so important. We can discuss it again sometime later, as I said. And the volume dots, I will again go. So these are even these three things: the volume dots, the volume bars, and the heat map, along with footprint. These four things can make your trading so powerful. Okay, so you don't see any lines on my chart. I don't have any lines on my chart. I don't have previous yes, I do put my support resistances again based on this, what I've seen on the recent market activity, but I have no lines on my chart. If I'm scalping, I just need to pay attention to what is happening currently in the market. That is all I need, because otherwise my mind will get diverted and biased. For example, let's say we have a bullish tone for the last 5 days, and what I will do is, when I come into the market, I will simply look into taking bullish trades, scalp trades. That doesn't help my purpose. So I do have a picture of what is happening around. We can discuss the profiles later in other sessions as well. Of course, I use them, and I have them in the back of my mind when I'm scalping. But I try and tend to focus only on what is happening right now. Okay, like we just discussed. Okay, so let's move on to the volume dot setting as well. So I, again, over here as well, I have volume dot. So what is the difference, if someone might ask? If I switch on total volume, so what I will get is, we will just see. So I'll get both red and green, you can see over here, and the total volume. Again, it is a good feature if you're trading simply based on volume. There are strategies based on that as well. We can discuss them later, but what we are discussing today and what I find to be very suited to me is volume delta. That is, I have only the delta plotted all the way. And again, where do I see volume then? I see it by time on a 15-second time interval on the volume bars, like you see over here. Okay, so this is how I have everything plotted. With that, we'll end this session. So if you have any doubts, you can again put them in the comment section. If you want to learn something in particular, you can put them in the comment section below. And again, we'll try and cover NASDAQ 100 and ES Mini in our future sessions. Why? Because they have liquidity, as I just discussed. We will go into what the spread is and why do we want to trade liquidity, because if you're scalping, you want to get in and get out fast. And if you've noticed something, you want to make use of it or take an advantage of it. Whenever something like that happens, take your points and get out. And that is where this particular platform comes in real handy and is really powerful. So hopefully I was able to help you learn something new today. Until next time, thank you.